Willie, maybe we should talk about the elephant in the room, which everyone's asking you right now. And I guess maybe we can address to get it out of the way. Is Bitcoin set for a massive rally? Is this a bear market? What should people expect for the rest of the year?
Well, it's at the start of the year. We've come out of a very, very soft December where we've got a lot of institutions selling down, taking their profits. And that has caused the price to come down substantially in a very weak kind of month where there's not a lot of liquidity in the market. But overall, if you were to look at who holds the coins, they're held by relatively strong holders. And it's very cyclical. The coins move from people who have held it for a long time to a whole bunch of new people. And we're now in this kind of peak where the long-term holders have most of the coins. So usually they don't want to sell, right? They're not going to sell until, there's some profit to be made. So, in a typical structure like this, you kind of expect once the sort of consolidation that we're in, we've been sideways chopped for quite a long time. Once that sort of completes, we can expect price to go higher just because so many coins are held by the guys that are not selling until they realize profit. So it's a pretty strong structure right now, even though the market's in, short-term fear because it's come down from, what is it, 69,000 to now like as low as 39,000. But that for Bitcoin is, the typical volatility. Long-term in the macro sense of this market, we're still in a bull rally, or bull structure at least. So yeah, it should be a good year.
And did I quote you right as you thinking that, we could still hit that $100,000 this year? I mean, maybe not Q1 or Q2, but it's still something that you see in your analysis?
Yeah, I think it's very, very possible. All we need to do is break the kind of all-time highs around the high 60s, and then it moves, because we've been consolidating around or below the high 60s for, wow, it's been almost a good part of a year. So when you have that amount of time agreeing, the price is solid around the, I think it's a $1 trillion valuation for this market. It's very healthy, right? It's like a lot of price discovery at the 50,000 plus range, which values Bitcoin at $1 trillion. So, once that's agreed on for a long time and we break higher, usually it does a step change up. We had that in tail end of 2020. So you see Bitcoin does these sort of huge rallies, and then it sort of waits around for a while to consolidate. And so, yeah, I think once we break all-time highs this year after such a long consolidation, going from 69,000 to 100,000, it's barely 50% gain. That's nothing for Bitcoin.
Yeah, that's really good analysis. Willie, talk to me about what you just said, is in that maybe there's something healthy about this consolidation. I have like over 500 students in my DeFi Academy, and they're always saying like, why does it have to come off, and why does there have to be this much pain? And sometimes I have that discussion that, this is a sign of actually building support levels, of finding out where people are in and out of trades, and that maybe without even some of this consolidation, we wouldn't see the 100K price, or we wouldn't see it last as long as it does. Do you agree with that sentiment, or how do you explain to kind
Yeah.
of people that concept?
Yeah, because when you think about the market, you've got it's a menagerie of animals, right? You've got the long-term holders, like maybe Michael Saylor, who's stacking this coin for his company for the next 100 years, right? So every coin he buys, that kind of person is not going to sell. So you've got the hardcore long-term investors, the medium-term investors, and then you've got the short-term investors. And then you've got these different types of people, like people who are new and don't understand it, and others that are really solid in their understanding and their investment in this market. And so whenever the price rallies, you're going to have, like, for starters, the guys that are new to it are going to go, I've never seen profits like this, I'm taking profit, and they sell. And as the thing starts to sell down, like people get scared, and a lot of the newer guys will like get shaken out of the market. So every time we go downwards, we're testing the lows and we're effectively shaking out, we call it weak hands, but basically the guys that get freaked out. And so at every price level, you've got to consolidate and make sure that people are holding this asset long-term solid investors, and the guys that are going to sell on the earliest sort of profit or the earliest signs of loss, they have to be shaken out of the market. And so, that's why you get these step changes. You go up, you shake out the traders, you shake out the short-term guys, the guys that are new to the market, and even they learn over a long kind of period of time being in the market that this kind of volatility within this emerging asset class is very normal. So you don't get up forever, right? You have to always test those highs with new lows, usually a higher low, hopefully. So we need time for the market to settle on the price. And furthermore, like underlying this, it's just more and more money is coming into the market. And if you think of Bitcoin as like this bucket, right? It's a bucket that people still value in, like equities or real estate, but it's a special one in that it's storing value online, so it's internet programmable and it can be transmitted borderlessly. It's a kind of new asset class. And so everything like this, where you're getting adoption, and the internet has seen a huge adoption, right? It's created an adoption S-curve. Bitcoin's the same, right? We're doing an adoption S-curve. So it roughly doubles every year. It has been doubling every year in terms of the number of people that are exposed to this asset. And it's been doing that for like 13 years. So we're in exponential growth, at least in the number of people holding it. And so the price will go up. It's just a matter of time for the market to effectively value this adoption curve. And that takes time, and the market's very irrational in the short term. So you get ups and downs. Like we can talk about how things are changing in the market. So it's becoming a lot more complex, and you're starting to see a little bit more volatility than you would have normally expected just by the way the market works now.